I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump unveiled his vision for rebuilding America today with a budget proposal that includes $1.5 trillion to upgrade the country's roads and bridges.
This morning, I submitted legislative principles to Congress that will spur the biggest and boldest infrastructure investment in American history. The framework will generate an unprecedented $1.5 to $1.7 trillion investment in American infrastructure.
New York City police say Vanessa Trump, the wife of Donald Trump Jr., has been taken to the hospital as a precaution after she opened an envelope that contained an unidentified white powder. Authorities say a preliminary test indicated the substance is not dangerous. She opened the letter, which was addressed to her husband at the couple's Midtown Manhattan apartment. The Senate kicked off debate on immigration today. The fate of so-called dreamers, young undocumented immigrants facing deportation, is at stake. President Trump wants money to build the wall on the Mexican border and limits to immigration in exchange for protections. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and Bloomberg Technology with Emily Chang is next.
Chang, and this is Bloomberg Technology. Coming up, Facebook's cool factor on the line. A record number of teens are jumping ship and could be making a beeline for Snapchat. Plus, our deep dive on how to get more women into technology. Former Twitter CEO and Chorus co-founder Dick Costolo joins us here. And a Bloomberg scoop, Apple will double down on substance over style this fall in a renewed focus on software. We'll discuss changes in the business plan at the world's most valuable company. But first, to our lead. U.S. stocks surged on Monday with the market showing signs of recovery after its worst performance in 2 years last week. Both the Dow and the S&P are now only down 1% since the end of December. For more, I'd like to bring in our Bloomberg Markets reporter in New York, Abigail Doolittle. So, Abigail, give us some context on the trends that we are seeing and the way the market opened today.
Well, truly on Monday, Emily, the bulls were out. We opened higher, and actually the sellers tried to push the major averages lower around 10 o'clock this morning, but the buyers stepped up. So we had a big rally for the major averages. At one point, the S&P 500 on pace for its best day since November of 2016. Nonetheless, big gains for the major averages, the second up day in a row, the first time we've seen that in February. All of this, of course, in opposite action to the selling action last week and the week before. The question is, what's next? What way will the volatility go? Now, today's buying action was a little bit less enthusiastic than what we saw last Tuesday and Friday, but even so, lots of the old tech names trading higher, such as Apple, Intel, Microsoft, and Cisco. What makes this interesting, Emily, some of these names, all of these names, in fact, last week were being sold off. Nothing has changed fundamentally, so it really points to the degree that sentiment and confidence are playing into the whipsaws, both to the upside and the downside, and that can change on a dime. So perhaps there's more work to the downside to be done, but today, certainly a rally.
Right. The FANGs did well. Old tech rebounding. What does that mean for the future?
Well, you know, so you're right about that. The FANGs certainly did well on the session. Last week, some of these names were being sold as well. Facebook, Amazon, Netflix, and Alphabet. But today, a big rally. If we hop into the Bloomberg, something pretty interesting shows here. And this is G#BTV3382. These are the daily moves for the Merrill Lynch FANG Index. And here is today. We see a big move higher, but interestingly, not bigger than last Tuesday's action, whereas the selling last Thursday was stronger. All of this suggests that the sellers may come out in droves and perhaps cause more downside. But interestingly, Emily, the S&P 500 up just slightly on the year, or actually down slightly on the year. The FANGs up more than 10%. So it's certainly right now an area of strength, even if that does shift in the days or weeks ahead, Emily.
All right, Abigail Doolittle for us there in New York. Thanks so much, Abigail. Now, when it comes to the sheer amount of global users, Facebook, of course, reigns supreme. But it is not a completely rosy outlook for the social media giant. A new report by eMarketer shows Facebook is losing ground to Snapchat in the teen demographic. Facebook is set to lose 2 million users under the age of 25 in the United States this year. Snapchat, on the other hand, set to gain nearly 2 million. Here with more, Deborah Aho-Williamson, principal analyst at eMarketer, and also with me, Activate CEO, and my guest host for the hour, Michael J. Wolf. So, Abigail, let's start with you. Deborah, excuse me. Let's start with you. What exactly did you find? How did you come up with this 2 million number?
Yeah, so as you mentioned, Facebook is expected to lose 2 million users under the age of 25 this year, particularly in the teen demographic, the 12 to 17-year-olds. We've already seen some of a decline in usage there over the past year or two, but that decline has steepened quite a bit this year. And for the first time, we're also seeing a decline in usage this year among people 18 to 24 in the U.S. and also users ages 0 to 11. Obviously, we know that Facebook isn't technically allowed for that age group, but we do know that people are using it in that age group. Unfortunately, not as many as we hoped, or as Facebook perhaps had hoped. So as far as how we got the numbers, they come from an analysis of third-party survey data, as well as public information released by Facebook, and government information as well on population trends and internet usage trends.
So do we have any idea if Facebook's algorithmic changes, the decision to show more posts from friends and family versus news, had an impact here? Like, is this a decision that Facebook is in a way, consciously making to sacrifice users in order to improve the overall experience?
Well, they did say that on their last quarterly earnings call. But I think this problem really has more to do with the fact that for teens, interacting in a visual, graphical, video way is very popular. That's why we're seeing Snapchat rising in popularity. We're seeing the factor that Facebook has a lot more older people on it, and maybe that's not so cool for teens. And we're also seeing that teens may not be as interested in the idea of keeping things for posterity. On Facebook, as we know, on the feed, you can save things forever, whereas on a platform like Snapchat, most everything disappears after 24 hours.
Michael, how troublesome is this for Facebook?
I think that when you step back, the biggest issue with Facebook is it really isn't about teens anymore. I mean, 80% of the users on Facebook are over the age of 25. Instagram's a lot younger, but not that much. It's so 70% of the users are over the age of 25. But when you look at Snapchat, it's only 50%. And so how troubling would it be? Because it's not that troubling, because a lot of what Facebook is going to do in terms of its growth is it's going to be among people that are older, and it's about people who have the time for more usage. And yes, teens and the younger audience is going to be going to Snapchat, but we also don't know what's going to happen next. In the last week or so, Snapchat redesigned its interface, and there were a lot of people across the internet who were unhappy with that. So these things are very much in flux, and also a couple million users one way or the other isn't going to make a huge difference in the whole Facebook universe.
Deborah, would you agree with that? I mean, to a certain point, with Facebook, we're the victim of the law of large numbers, but does losing 2 million not really matter so much for Facebook, and gaining 2 million not so much for Snapchat? Or is this part of a longer-term trend that is going to continue?
Well, yeah, I mean, we're obviously going to be watching the numbers to see if this is a longer-term trend. But, Michael's right. When it comes to the important part of Facebook, which is how much ad revenue are they generating, we're not seeing any impact at all. As a matter of fact, we're forecasting that Facebook will have about a quarter of all U.S. digital ad revenue this year, and about 10% of all media spending in the United States this year. And that is still expected to grow up in double-digit percentages over the next couple of years. So advertisers are still very, very interested in that Facebook audience, even if maybe the teen audience is not using Facebook itself. They may be using Instagram. That's another thing. Instagram is also very popular with teens and young adults, and it's growing in its ad revenue as well. So Facebook's got a lot of hedges against this potential problem.
Michael, quickly, Unilever is threatening to pull its advertising from Facebook, from Google. They're saying that these platforms have become a swamp for fake news, sexism, racism, extremism. How serious is this?
The problem is truly serious, and it's more likely that Facebook and Google and others will respond to their biggest customers, to advertisers, than they will to regulators. So, of course, the biggest advertisers are concerned not just about their content going across things that are promoting hate, but they're also very concerned in the wake of the 2016 election that one way or the other these platforms have contributed to the sharing of fake news and misinformation, and going forward they don't want to be responsible for that or part of it.
All right, well, obviously we're going to continue to talk about this. Dick Costolo, former Twitter CEO, is going to be coming up. We're going to touch on that with him as well. Michael J. Wolff, you are with me throughout the show, and Deborah Aho Williamson, principal analyst at eMarketer. Thank you so much for sharing your report with us. Coming up, we talk to the man who used to run Twitter. Dick Costolo joins us to talk about gender inequality in tech, Twitter's recent financial turnaround, and more. That is next. This is Bloomberg. Over the last week and more, we've been examining the male-dominated culture in tech, and my next guest is well aware of the problems detailed in my new book, Brotopia, Breaking Up the Boys Club of Silicon Valley. In fact, he's made it his mission to hire as many women as men. At his latest company, Chorus, I'd like to welcome former Twitter CEO and Chorus co-founder Dick Costolo. Great to have you back on the show.
Great to be here. I was hoping you were going to call me Abigail, like you referred to the last woman who wasn't named Abigail.
How about I call you Abigail?
All right,
and take
perfect.
It from
Just
there.
keep it going.
All right. So I want to
People
start.
who are just tuning in are like, what?
What are you talking about? I want to start on a positive note here, because when you left Twitter and you started Chorus, you approached hiring differently than most CEOs, and you said, I'm not going to hire another man until I hire a woman, and vice versa. And you continued that sort of one for one as you grew. Why did you do that?
Well, I generally tried to keep it 50% men, 50% women at all points, and across engineering and the company, because I felt like when you fall behind, and of course, as is common knowledge based on all the gender and diversity studies that come out from all of these companies, Twitter and Pinterest and Facebook, et cetera, once you get behind on things like gender diversity in your engineering team, it just becomes frankly impossible to catch up. You have to start, you've got women engineers who are interviewing at the company. They want to meet other women engineers. There are only so many women engineers. The women engineers end up spending all their time interviewing other engineers. Then they're not writing production code, and promotions come around and they're like, how come you didn't write production code? And that's sort of one trivial example of how hard it is, of many of how hard it is to catch up when you fall behind. And I just decided that the way to deal with that is to start off by not falling behind. Not say, well, give yourself the excuse in the early days of, well, we just have to get the right 7 people in here on day one, and if there's 7 men, we'll catch up later. You don't catch up. So I decided if it was 50-50 early on, and always that way on the leadership team and in engineering, et cetera, it would be easier to stay that way, and I think that's proven to be true.
So why don't more CEOs and founders think like you?
I think they just don't think about it. Listen, if you're a first-time founder, you're trying to raise money, you're trying to find product market fit, you're waking up every morning, now I'm responsible for people I've never been responsible for before, and you want to squeeze your head together and cry about all the things you're worried about. And so they don't think about it, or they feel like that's something I can deal with later. I think there's probably a general sense of, well, there's only 30 people in the company now, 40 people, 50 people. Yeah, that's going to be an issue because we're out of whack here right now, but we'll go deal with that later. And the reality is, once you fall way behind, it's almost impossible to catch up. Everything in the organization starts to work to favor the existing imbalance and to keep it going. Not for any nefarious reason, just because that's the way everything in the company is. And so, for example, if you've got 90% men in engineering and 10% women, the way you bring people into the company in engineering is referrals. Well, the junior engineer guys are hanging out with other junior engineer guys, and they know mostly typically guys, and so that's who gets referred in. So that's what I mean by this sort of, once you fall behind, that imbalance starts to just sort of reinforce itself.
Is there anything in particular, and I know Twitter is not unique in this, as we know, most companies are male dominated, but is there anything in particular that you learned at Twitter where you saw things go the wrong way that could have been better if there had been more equal men and women?
I would frame it differently in that I always felt that that when I had a more diverse group of perspectives on a decision that needed to be made. Look, when you're a leader or a manager, 80% of what you're doing is listening and gathering feedback in order to make the best decisions. And if you've got the broadest possible set of perspectives to make a decision, that's going to be better than having a very, very narrow set of perspectives.
In fact, you can move more quickly, right? Because you don't have to go ask people on the street
sure,
what they think of your product.
Think about it, if you've got a leadership team sitting around the table that's 10 guys and your user base is 50% men and 50% women, you're going to have a serious lack of what half of your user base might be thinking about why or how they use the product in a certain way. And one of the benefits of Chorus is we had a team, small though it may be, that matches basically the user base. And so I always thought that was something you should work toward, to have more of those kinds of, less narrow socioeconomic, demographic, gender-based, et cetera, perspectives into any decision that was being made.
Now, in the book, I interview Evan Williams, co-founder of Twitter, and he told me that he thinks if there had been more women on the founding team of Twitter, there in the very, very earliest days, that maybe online harassment and trolling wouldn't be such a problem, because they weren't thinking about it. They were thinking about wonderful things that could be done with the product, not how it could be used to harass people. If there were more women at the creation of these products, at the creation of the internet even, do you think that the products would be different?
Well, there are two different things there. I'm not sure that I necessarily agree that if there were more women on the founding team of Twitter, some of the issues that the platform has wouldn't exist. It's really hard to anticipate the way these products are going to evolve, the way they're going to be used. There are always lots and lots and lots of unintended consequences. Even now there will be unintended consequences of the way they're used a couple years from now when we already know so much about them. So I'm not so sure I'm of the same opinion on that point. There's no question that in the founding of any product or any organization or any business that to the extent there are a lot more women around the table at the very beginning, you're going to end up with a different set of decisions from day one than you would otherwise, and I think that's a good thing.
All right, Dick Costello, you're sticking with me. We're going to talk a little bit more about Twitter and the future and social media in general when we're back. Former Twitter CEO and Chorus co-founder Dick Costello with me here. This is Bloomberg. It's been something of a charmed moment for Twitter lately, mainly the company's surprise revenue gain and its first real profit in its latest earnings results. So we're continuing our discussion now with the man who ran the social media platform from 2010 to 2015, Dick Costello, former CEO of Twitter. So the numbers have been looking good, and yet Anthony Noto, the COO, recently left to become CEO of another company. How big an impact is that? And will they fill his job? And should they?
I'll tell you, Jack has been very carefully and thoughtfully, I think, backfilling the ranks of the management team over the past few years since I left in 2015. There was a lot of news about executive departures in 2016. But at the same time, Jack was doing a great job of bringing in people to fill those positions. Leslie Berlin, the CMO from American Express, has done just a world-class job. Ned Siegel, the new CFO, I don't know him personally, but everyone speaks very, very highly of him. Same with folks on the product team and engineering, leadership, et cetera. So I think this is, listen, Anthony is world-class. He's a great human being. He's going to be an extraordinary CEO. I'm really excited for him. But Jack's done a great job of building the bench over there, and Anthony did a great job with Jack of bringing in Ned to keep the financial house in order.
Do you think the turnaround is long term, or is this just a short term thing? I know we're always rooting for Twitter, right? But
Twitter is one of the most important, platforms and mediums in the world. I have every belief and hope, and I'm a, very long shareholder, that it will continue to be an independent company and thrive. One of the many things I adore about Jack is that he is a very calm and patient and thoughtful leader. Which is exactly what you want in these sort of over the long course of the future. This is the way we're going to steer this ship and try to build a successful company and not sort of freak out when the market zigs and something changes in the near term. All by way of saying, I think he's sort of the right person to, now that they've got this, the company on a financial trajectory that the market and the internal team like and can work against. He's going to continue to be the right person to lead that company. I love that the folks in the company now really feel like they've got the wind in their sails, and it's you can see it when you go hang out with folks from the company now. They're more confident, they're happy, they feel like they've got momentum behind them now.
So what do you make of the sale chatter, and who could be a likely suitor?
That chatter comes and it did when I was running the company. So it seemed like every couple months there was a story out about someone or other being interested in the company. I'm confident and sure that Jack has them all focused on the things they need to focus on internally. And the beauty of that chatter happening so frequently is I think the people in the company now know well enough to just not pay it any heed and stay focused on what the priorities of the company are.
Big story in Wired magazine this week. Inside Facebook's hellish 2 years. We just spoke earlier about Unilever threatening to pull their advertising from Facebook, and Google calling it a swamp, filled with racism and sexism. Do you think Facebook's loss could be Twitter's gain this year, or is this something that all of these platforms are going to have to reckon with right now, and what will be the consequences?
I think the biggest consequence for Twitter was, to me, in my mind, the statements coming out of Facebook just a couple Fridays ago, I believe, that they were going to sort of rethink the way the newsfeed worked to be much more about social sharing and what your friends are up to, and less about news and publishers and media. If I heard Mark correctly, that to me is a big boon to Twitter. Twitter has sort of always been about that. This is what's happening now in the world, the pulse of the planet, working closely with media companies, publishers, et cetera. So to the extent they can now feel like this is, we're the place for publishers again. We're the source, the single distribution vehicle for them to really work closely with on things like real-time events and what's going on while an event is happening. That's a giant boon to Twitter, both its relationships with content providers and advertisers.
All right. Well, we will be watching over the next year. Former Twitter CEO Dick Costolo, founder of Chorus, thank you as always for stopping by and sharing your views on a wide variety of topics. Bloomberg LP operates a global breaking news network on Twitter called TikTok, I should say. Coming up, new details on Apple's massive software upgrade. That is next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The president's spending proposal would cut the federal subsidy for Amtrak in half, despite 3 fatal crashes involving the passenger rail service in the last 2 months. Under the budget proposal released today, the administration aims to cut the federal contribution from $1.5 billion to about $738 million for the fiscal year. Secretary of State Rex Tillerson met with Egyptian President Abdel Fattah el-Sisi in Cairo today as the two countries reaffirm their commitment to battle Islamic militants in the Middle East. Tillerson's visit comes as Egypt is undertaking a major military operation in Sinai, where Islamic extremists have been leading an insurgency. Authorities estimate Iraq needs more than $88 billion to restore that country after years of fighting Islamic State militants. Among the hardest hit areas is Mosul, which Iraqi forces, aided by Iranian-backed Shiite militias and a U.S.-led coalition, recaptured in July 2017. In South Africa, President Jacob Zuma has reportedly been given 48 hours to resign. That's according to South Africa's state broadcaster SABC and other networks. Zuma has defied pressure to step down since he was replaced as head of the ANC ruling party in December. His 9 years in office have been marred by scandal. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. here in Washington, 6:30 now, Tuesday morning in Hong Kong, where we're joined by Bloomberg's David Ingles with a look at the markets. David, good morning. It was certainly a good day for Wall Street here in the States.
And it looks like we will be extending that global rally. I mean, we were already up 0.5% yesterday. Japan was, of course, closed, though, on holiday. That's opening up, and we're looking to see the Nikkei 225, just based on futures at the moment here, Elisa, looking to gap up about 300 points at the open there. So, I mean, it's one of the first days in about 2 weeks that we're going into today with not just gains on Wall Street, but also some proper upward momentum coming into the open here. Whether or not it's a serious retest of some of these resistance levels, that's for another conversation altogether, because we pretty much blew below a lot of the key support levels, and, you know, we're quite deep at the moment when you look at some of the key benchmarks. But that being said, we have earnings coming through that might provide a little bit of support, and also some eco data coming out of Japan that might also nudge these equity markets higher this Tuesday. At the moment, we're looking at gains, though, at the open for the major markets here in the Asia Pacific. I'm David Ingles here in Hong Kong. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. While Apple plans on unveiling a lot of new features in the fall as part of its annual software upgrade, the most important improvement for the iPhone maker is what is not being debuted, namely redesigned home screens and revamped photo apps. That's because Apple is trying to renew its focus on quality in response to criticism that some of the company's software has become prone to bugs and underdeveloped features. Here with that scoop, who else but our Bloomberg Apple reporter, Mark Gurman, and still with us, Michael J. Wolf, CEO of Activate. So, Mark, what can you tell us?
Can tell you a lot. So Apple is changing its development strategy. So instead of focusing on a marketing-driven deadline to come out with 100, 200 new features every year, they're going to focus more on the big features. There might be 10, 20, or 30 of those, and let the smaller ones fade away to the following year, so they don't put too much attention there, too much attention on the big ones, which could end up in things getting delayed and bugs. And we've seen the iPhone has been prone to bugs in the software in recent years.
Why focus on this now versus any other launch?
You know, it's a good question. I think it comes down to Apple's scale, right? So Apple's grown in terms of how many devices they sell, from tens of millions of iPhones a year to now, you know, over 100 million iPhones a year. Their engineering team has grown from, you know, fewer than 100 people when the first iPhone was being worked on to, you know, thousands of people around the entire world. So it makes it more difficult to stick to that deadline. Things get lost in development processes. Things get delayed. There's just more opportunity for failure now. So they're sort of taking a step back, trying to go back to their origins and focusing on the quality that originally differentiated them from Microsoft Windows and Google's Android.
Michael, what do you make of this?
Well, you step back and think what's most important for them is 1.3 billion installed base, 1.3 billion people using an iPhone today. And so it's just as important to deliver software that's reliable, features that work. It goes back to what Steve Jobs' original mantra, which was, it just works. And so when you're focused on selling new devices, that's one thing. Another is you've got to maintain that group of people using it. Otherwise, those people are going to migrate away to Android, which has always featured faster, better processing, a lot of the new features, but it's been very buggy and not reliable.
So, you know, Mark, how then do we expect the rest of these updates to roll out?
So right now they're on a basically 2 major update a year schedule. They have a major minor one, I like to say, in the spring. There's one coming out now in March with the tab to turn off the battery slowing mode that we've talked about on this show thousands of times probably. Then they have one that they'll announce in June to be released in the September-October timeframe. They'll stick to that. The difference is now they're splitting some of the features over the next 2 years instead of putting it all this fall.
Talk to us about some of the personalities at play, including Craig Federighi, who actually often spends a lot of time on stage. He's not, as talked about as an executive, but he is the senior vice president of software engineering.
Right, and Craig Federighi is a very interesting story. So he came back to Apple from Aruba, a security software company. He used to work at Apple many years ago in 2009, and he wasn't really a big name. And then about a year and a half into his time there, Bertrand Serlet, a French guy who was the head of Apple software engineering since Steve Jobs came back to the company in the late 90s, he left the company. His boss retired, so he sort of shot up the ranks and was put in charge of all Mac software. A few years later after that, Scott Forstall was fired. He left the company. He was in charge of iPhone software. So now Federighi took over, in addition to Mac software, iPhone software. Now, within the last year, he's been given more power, and now he's in charge of Siri as well. So his story of climbing up the Apple food chain has been one of the biggest in Apple's history, and he's probably one of the top 3 most important people at the company right now. I don't think people recognize that. Hugely
important. Michael, when you look at, there's been some concern about iPhone sales, obviously, with the results of the last quarter, and yet still it's, Apple, the iPhone is the top-selling smartphone in like the top 5 categories in many, many countries. So, how much of a concern is it really?
Well, people are always trying to look for cracks in Apple's foundation, but there's a lot here that suggests things are going incredibly well. For example, HomePod, everyone said it would be a failure. It's totally sold out right now. Their services revenue has grown as much as 20%, and they have a large amount of opportunity in services going forward. And at the end of the day, some of these software changes are just about making sure people will still find that their phone is reliable and that everything they use in the Apple ecosystem is something that delights them and reliable.
So, Mark, you've got a couple of other stories out today, one having to do with augmented reality and a company that Apple is backing, and another having to do with Android. Tell us about that.
So the Android story is very interesting because it's sort of the opposite of Apple's approach. While Apple is sort of going for a small feature set year, not a big user interface overhaul that they did a few years ago, Android, Google's operating system, is going in the direction where they're going to say, hey, we're going to redesign the thing to try to attract more iPhone users, new icons, new animations, and whatnot, deeper integration with Google Assistant, which is how they're going to start making some more money, more revenues, because their operating system doesn't generate as much, services, cloud services, as Apple does on the revenue side, or in terms of Apple's growth recently. So Google taking the opposite approach there.
Michael, how optimistic are you about augmented reality and Apple's efforts there?
Yeah, I'm actually very optimistic. In fact, our firm, most of our research shows that virtual reality is going to be a relatively small business versus augmented reality, which is not just about consumers, but it's going to have some massive opportunities in enterprise. And so it's going to be, augmented reality is going to impact everything from medical to engineering to construction. So augmented reality should be a growth engine for anybody who's producing a smartphone, as well as for any of the major software providers.
Would you agree?
Definitely. I mean, augmented reality is going to be the hot new topic over the next 3 years. Apple's working on a headset. They hope to have the tech ready for it in 2019 and release their own headset by 2020, 2021.
All right. Great reporting from Mark Gurman. As always, thank you so much, Mark. Michael, you are sticking with me. Michael J. Wolf of Activate. All right, Broadcom has lined up one of the biggest debt commitments ever to fund its proposed $121 billion takeover of Qualcomm. 12 lenders have agreed to provide $100 billion in credit facilities, and funds affiliated with Silver Lake, KKR, and CVC Capital will provide $6 billion through convertible notes. Qualcomm seems poised to reject Broadcom's offer. Coming up, in a rare move, Amazon is planning on eliminating hundreds of jobs. We'll discuss the latest moves of the tech giant next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Amazon is cutting hundreds of jobs at its headquarters in Seattle. The move, part of a broader reorganization at the company that's also hiring in newer lines of business like cloud computing and Alexa. For more, I want to bring in Bloomberg Spencer Soper, who covers Amazon in Seattle. Still with us, we've got Michael J. Wolf of Activate. So, Spencer, what do these job cuts mean? Where are they happening?
Well, we can read a couple things into this. We know it's just a few hundred. You're used to seeing headlines about Amazon hiring 100,000, not cutting a few hundred. But they're saying it's in their more mature lines of business. Basically, it's e-commerce business. And so what we can read into it is, one, they've been automating a lot of those functions over the years. And so that's likely generated some slack in how things are bought and sold, particularly on vendors and suppliers, that they're able to do more things automatically over the platform that they used to require manual help with. And the other thing is that there's just a lot of overlap. If you think about all of the ways that Amazon went at the grocery market in particular, they had like Subscribe and Save and Amazon Pantry and Amazon Fresh, and now they purchased Whole Foods, and they're doing delivery of Whole Foods with Amazon Prime now. There's a lot of overlap in all of these different divisions that are selling the same things, so there's likely some consolidation there.
If you look on the terminal, Amazon equity loss, we can show you just how quickly the workforce at Amazon has been growing. That white line at the bottom shows the size of the workforce growing, and then the circles are where you see slight dips. And you can see also into 2017, jobs have actually skyrocketed. So those circles are an indicator, Michael, that Amazon doesn't cut jobs very often.
No.
So
they're going to be a net creator of jobs. And you should expect that any sector of the economy where you've got technology that's becoming more sophisticated, then you're going to lose some jobs. The difference is that Amazon is creating jobs through new businesses it's getting into. If they're going to get into the package delivery business, they're going to expand in the grocery business, as well as Amazon's marketplace creates jobs beyond their company. The number of companies that are selling their goods on Amazon and through Amazon's marketplace is increasing. So I would expect that Amazon is going to continue to be a huge generator of jobs in this economy, especially now that they're creating a second company headquarters.
Let's talk about that second headquarters, Spencer. We still don't know where that will be, but Amazon has created a lot of suspense and mystery around it. They have said they will be creating how many jobs, and how many jobs do you think they will actually create as a result of this new headquarters?
Well, I have no idea how many actually, but what they've put out is that it would be an investment of about $5 billion and create up to 50,000 jobs over a period of 15 years. So they're putting that on a long-term time frame, and they've got approximately 40,000 here in Seattle. So it's a huge investment. They've narrowed it down to 20 cities, which isn't really narrowing it very much. Basically, major metro areas in the country are covered. It's still just a signal of their growth, that they're still a job creation machine, and this is just a little blip along that path.
It's interesting. Amazon has had a history of being such a secretive company, and yet with this headquarters, on one hand, they're being more open about the process. On the other, they're not telling anybody anything about which way they're leaning. Shira Ovide, one of our Bloomberg Gadfly columnists, Michael, wrote a piece about how Amazon, once was very secretive. Yes. Now they're sort of opening the kimono a little bit, if you will. But there's still a lot of things that they're not telling us. Well,
this is a company that does a great job of getting the best prices out of its suppliers. And in a lot of ways, having a competition among 20 different cities is a great way of getting those cities to negotiate against each other and give Amazon the best prices and across the board. So I think that Amazon is becoming more open, yes, because they're involving a lot of other people, and of course there's suspense. This is becoming like a reality TV show. We're waiting for the big reveal.
Absolutely. We none of us can wait. Spencer, how does the acquisition of Whole Foods play into this at the same time that Instacart, one competitor in the grocery delivery space, is raising more money and trying to step it up?
Well, it's good news and bad news for Instacart. Bad news in the sense that, Amazon looking to do what it's been doing for Whole Foods. But the good news is that it's upping the game for every Amazon competitor out there. And so if Instacart can, step up and help all of the companies competing with Amazon, Walmart, Kroger, Target do any kind of grocery delivery, then that's good news for Instacart.
All right, Spencer Soper, who covers Amazon for us in Seattle, home of Amazon headquarters #1, and Michael J. Wolf, CEO of Activate. Thank you, as always, Michael, for joining us here today on the show.
Pleasure. Great to be here.
Coming up, we hear from the co-founders of the nonprofit Code.org on what they think the American dream is today and how STEM education can shift the imbalance of women in technology. This is Bloomberg. The price of Bitcoin has stabilized in the last few days, but one analyst predicts Bitcoin is heading lower, much lower if the years of the dot-com bubble are any indication. Already well off a record near $20,000 in December, the cryptocurrency could plunge a further 90%, according to commodity strategist Mike McGlone of Bloomberg Intelligence, who says if you compare Bitcoin to the historical movements of Amazon and the NASDAQ during the dot-com bubble, it could fall to $900. Well, Hadi and Ali Partovi are twin brothers, investors, and entrepreneurs, and they've served as early advisors or investors at many tech startups, including Facebook, Dropbox, Airbnb, and Uber. And they're co-founders of the nonprofit education company Code.org, which Hadi continues to lead full-time as CEO. We caught up with the Partovi brothers and talked about STEM education and the current status of the American dream.
The entire vision around Code.org has been very personal relative to our background of coming to this country as immigrants. When our family came to America, it was partly because this is the land of opportunity. And it is a beacon for immigrants that if you work hard, if you're smart and you put everything into it, you can get somewhere. And we've seen that come true for us in spades because of our background in technology. But looking at the world at age 40, I saw that the American dream doesn't feel like it's the same way that it should have been or that it used to be. And politics reflects this as people arguing with each other, but the core of that argument is people feeling like opportunity isn't what it used to be. And there's many things you can argue about how to fix that, but the one thing that everybody can agree on is that schools should provide students equal opportunity. And here's this field that was the basis for Ali and my success and many other people's success, the best paying subject in education, leading to the absolute greatest careers, not being offered in the vast majority of America's schools. And the idea for founding Code.org was really to provide that opportunity for every American as part of fixing the American dream, because that's so important to basically provide opportunity for all.
Let's walk through the numbers. Women make up a quarter of computing jobs nationwide. They get 18% of bachelor's degrees in computer science, 7% of venture investors, and women CEOs, entrepreneurs get 2% of venture funding. How do we change that?
There's a lot of things that need to change. The part I'm focusing on at Code.org is the education pipeline, and I'm keenly aware that if we have all these girls becoming women, becoming computer scientists, if the culture side of what's going on in Silicon Valley doesn't change, it's all for naught, and both need to change. But all the numbers you suggest are the same, or at least they used to be the same in the K-12 education system, where in high school, AP Computer Science used to be 17% women and highly dominated by white and Asian males. And if you went back to middle school, it was almost entirely male and driven by the boys who are an after-school club. What we've done at Code.org has completely changed the high school and the K-12 picture. We start teaching computer science using Code.org's materials as early as kindergarten or elementary school. The Code.org student base now is 25 million students, which is much larger than the software engineering population of the United States, and it's 45% girls. So there's almost 12 million girls coding on Code.org.
So how did you do that?
The answer to that really is teachers. I mean, we did a lot of great things at Code.org, but the key to getting US education to adopt computer science has been the American teacher. And this has been such a heartwarming lesson for me because at this outset, I also thought this is going to be hard. How do you change the school system? Everybody would say, don't try to change the school system. Do something after school, starting summer camps or clubs or something online-only instruction. And I felt if we want to reach every student, especially the students who are least likely to have opportunity, they're not going to summer camps and after-school clubs. We need to reach them in school. And what really happened is we woke this passion in the American teachers who got into the field wanting to live a life of service for their students, and then feeling like they're part of this system that is just sort of stuck in the Stone Ages.
How do you recruit teachers when those teachers could be making a lot of money at Google or Facebook?
So we don't get computer scientists to become teachers. We get teachers to learn computer science. And Code.org has now trained over 70,000 teachers how to teach our computer science materials.
Last year, 50,000 students graduated from college in computer science. So just think about, that's the total number of people coming out of college. Code.org has trained 50% more than that teachers to teach it. So it's a dramatic leverage in terms of increasing the access to this field.
So what are the challenges that still remain?
Changing the school system is hard. Funding is hard as well.
And Code.org is a nonprofit.
We're a nonprofit, and I should say we're funded by the same tech companies that I believe should be fixing a lot of the gender issues in tech, and we're part of the solution, I believe. So I think those same companies should get credit for the work that we do. So Amazon, Facebook, and especially Microsoft are our three largest donors, and when we're bringing 12 million girls into this field, those companies should get the credit for funding an operation like this that is basically helping create opportunity for students who want it.
Hadi and Ali Partovi there, co-founders of Code.org. We're going to have much more of that interview on Studio 1.0 later this year, Bloomberg Studio 1.0. It's a great and fascinating conversation talking about what they're working on. That does it for this edition of Bloomberg Technology. And this Tuesday, we're going to be at the Goldman Sachs Tech Conference right here in San Francisco, talking to a great lineup of guests, including Nick Woodman, GoPro CEO, Brad Garlinghouse, CEO of Ripple, and Bill Reddy, COO of PayPal. And a reminder, we're live streaming on Twitter. Check us out at Technology. Weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.